Hi, this is Zach Mead from Zach's Traders Cafe with a look at some bulletin board hero stocks on Tuesday, the 21st of June. Starting off with China New Energy and still waiting for this consolidation zone to break. Probably the best way forward here, even though there's support towards the 2 pence levels, to wait for an end of day close above the 20-day moving average at 2.39. Above that, we should head towards the top of a rising trend channel from the end of February as high as 3.5 pence. Time frame on that by the end of next month, beginning of August. Onzima Ventures, the next contender, and here consolidating at and above the 10-day moving average at 1.48 pence. Above that, one would be reasonably confident of further gains. If you're cautious, maybe wait for an end of day close above 1.8 pence, which is a recent resistance. Target here as high as 2.5 pence by the end of July. At this stage, only really back below, let's say that that initial peak from March, 1.32 pence, would be flagging any danger of a top being in place. Solar oil is next. Haven't looked at this for a long time, and you can see from the chart precisely why. Could be a falling wedge formation here, which requires weekly close above the 50-day moving average at 0.25 pence, and also this February resistance line to crack it. Above that, we could then head back towards 0.4 pence. So a bit of a momentum trigger required there before regarding this situation as being back in business on the long side. Next up, stock which I looked at, I think, last week, Triad Group. Beautiful bull flag here after the gap through the 50-day moving average. I call it the rocket launcher setup. That suggests that we're still in a very positive frame of mind here, trading either side of that 32.75 pence March resistance, but at least while we're above 30 pence, the expectation is for a move over the next couple of months up to 45 pence, which is the top of a September rising trend channel. Just wanted to look at UK oil and gas on the basis that just a hint that the shares have seen this December support line around the 1.25 pence level. If you're an aggressive trader or a fan of the shares, you'd probably be going long of the stock now at the current level. Stop loss back below that 1.16 February floor. RSI at 20 out of 100, so very oversold indeed. So it wouldn't take that much to get a decent reaction. If you're cautious on the shares, maybe wait for an end of day close above the 10-day moving average at 1.47 pence before going long. Vast Resources back in business after a long time, been a very painful decline here. Really disappointing. But we do have this falling wedge formation here, and the shares are now back above that old 0.18 pence April floor. While we hold above that, at least up to 0.3 pence, which is the 50-day moving average, and more likely even up to the main post-April resistance of 0.4 pence. Stop loss back below 0.15 at this stage. Finishing off with Verona Pharma, another potential recovery play here. A gap through the 10-day moving average around the 2.8 pence level, also snap back above the main 3 pence support and above the 200-day moving average as well at 3.38 pence. So really doing everything in one day here. The view at the moment really is, while we're above 3 pence, heading towards at least 4.4 pence, which is the top of this rising trend channel from as long ago as November. That's it from me. More updates at the same time tomorrow.